Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Linn and Associates with your financial market update for this weekend of Friday, the 19th of May, 2017, just getting on to 4 p.m., and that'll be Central Daylight Time. Let's do a fast review of what went on this week. We've got a special prosecutor already investing the Russian situation with the Trump campaign and possibly the president, should be with him, and that's only 120 days into this presidency. Am I right? Something like that. And here we are with the special prosecutor. I've never seen anything like it, nor has the market. But guess what? The stock market doesn't seem to care. In fact, the stock market successfully even shook off today a lot of what was going on yesterday when Brazil's president is now possibly going to be removed for office for graft, taking bribes. Who knows? I'll let them figure that mess out. We have this coming week the OPEC meeting. And as you can see, oil's going into the close today in a very, very strong note, looking powerful as the day is going on here. We'll see what that all means as things go on, but still looking quite good. And talking about OPEC, one of the things you've got to wrap your head around is that they have prepped the market that they're going to do an extension of cuts into March at some point. I don't know if it's the end of March, beginning of March. We'll find the details of that out. If they don't do that, this whole thing is bearish. The second thing that can start derailing them, they're putting out feelers that there might be talks about further cuts. If they do that, the market's going to expect it. That could be another problem for them. So there's a lot of elements here you've got to be looking at and understanding that maybe you're going to get that adage. You buy the rumor, which has driven crude back up from roughly $43.5, $44 back up here to near $51. How much of that is on the come? Just be thinking those things out. Metal markets settled okay this week. The dollar took the beating. That is the thing that happened. And the stellar performer, obviously the euro currency, just wrapping its arms around everything to the upside. So in the NASDAQ, what we saw for the month, and this is a monthly chart, is that the market is off its highs about 75 points from the month high, but still looking very, very good on a monthly chart. The weekly chart took a hit. And what happened is we've now got an outside week down. Now, you haven't had one of these other than right here. And when you get those, what you do is I teach on a chart, remove the name and everything else. When you have an outside week down or an outside day down, I apply it the same way. If that high is taken out the following week or the week after, it's called a bear trap, and the market normally accelerates to the upside because you've caught a group there that thought the market was coming down. Now, you can go back and do your own analysis. It's the flip-flop on an up week. That's how I treat it. Doesn't mean I'm right. That's how I treat it. When I look at the weekly chart, it's the same thing. So on the weekly chart, if this high is taken out, and we'll get to that in a minute, there are some objectives that I'd have. On the other hand, until it's taken out, is this going to be part of a trading top? You have a much firmer one in place in the Dow. I'll show you that in a moment, too. The pattern on the chart is still crystal clear. Higher lows, higher highs, bullish. What else do we know? That every time we've had a break of any meaning, those that just closed their eyes and bought this market saw new highs. Are we seeing that again? I have a feeling we're seeing some of that again today. If you take a look at where the market had this problem come in, 5 points away from the upper Bollinger Band. You're in a zone, and obviously anyone would say it's been a heck of a bull run in the market, and momentum is still pointing up. We've had patterns where it drops away like it's starting to do, but it never really turned down, and I'm saying that is still very much in play. If it were to turn down, and if the market were to break hard, the 18-week moving average of closes at 53.92 could be a support target. I would expect that. The weekly chart on the Dow is different. First of all, if you go to the daily chart, you're going to see this 21,010 level. You got a double top at that level. Then you came up on this week to a high of 20,995 and couldn't get through that number and backed off again. Is that the making of a triple top? It is, unless you get through it. Okay, it's that simple. Momentum turning down. The pattern was broken. You no longer have a pattern of higher lows and higher highs, but that pattern doesn't scare me as much as what's going on, and that is that the market did fall back to the 18-week average, and it held it. If it closes under that number of 20,574, some are likely to say, as chartists, maybe it makes a run to the lower Bollinger Band. When you come to the S&P, same thing happened, a bit of a different pattern on the chart because it did keep its higher lows and higher highs. But if you take a look, the market was coming down last week, and this week it broke again. One of the support areas, in theory at least that I have, is the 18-week moving average of closes. It went right to it, to that 23.49 level, and bounced away. So not bad action, but the market is flirting with starting to turn its momentum down. The word is flirting, hasn't done it yet. So we're at a very, very important area here. In the Russell, the market tried to get out of the upper part of the Bollinger Bands. What is the importance of Bollinger Bands? Well, if you're new to my tapes, these black dashed lines represent an algorithm called a Bollinger Band, and you can go to Wikipedia and all these other areas and read about it. I have a course that teaches this, in fact, on our website. And in a nutshell, think of this as resistance support. Now, when you get into these tight bands that look like this, almost looks like somebody put a bottle on a stove and it melted, doesn't it? And here it is. You had a wine bottle. It's melted. Well, think of the fluid in this back here, and it starts boiling, and it's going to perk out of here, and it's going to blow out the cork and go up or down. The longer the neck, the bigger the eventual move, and that's what you're fighting with right here. Momentum in this market is pointing down. The bias of the market is down because you're under the 18-week moving average, but each time we've hit so far the lower Bollinger Band, this market has turned itself back up and not been able to stay down. Eventually, it's going to break out one way or the other. 3 weeks ago, you tried to break out to the upside. That failed miserably. In no time at all, you were back to the 18-week average of closes. You tried to break out this week, went right down to the lower Bollinger Band, and now you're bouncing back up towards the 1376 level, which is the 18-week average of closes. This is a weak sister of the other indices. This is not the poster child of strength. In the upper VIX, let's take a look at Bollinger Bands again. So here you are with the market, and this was the week of May 16th. The market explodes to the upside, closes off at 1559 for the, this is a daily chart, by the way, if I said weekly. Takes out to 1559, closes over it. Now, when you take out a higher low of a Bollinger Band, the theory is that you'll only stay out of that 5% of the time. I've gone further and said that I think you can count each settlement over it as 1 percentage point. Does it work in all markets? No, I have variables, but it's a good rule of thumb. So if it closed over it, I say now there's a 4% chance left that the market will close over the upper Bollinger Band. And lo and behold, the next day, the market closes over it. I now go to a 3% chance, and here the market falls back, and this is today's action. Where did it try to find support? The 100-day moving average of closes. If that doesn't hold, that is a big if, you go to 1104. You have divergence because you've got momentum pointing down, you've got a pattern of higher lows, higher highs, and each time we've tried to break out these points to the upside, the market hasn't been able to do it. So obviously the market is still saying that within it, boy, everybody's still bullish. A market that's full of surprises for traders are the notes. You know, You would think that now that we're at the 19th of May and in June we get our FOMC meeting, the probabilities are off the wall that the Fed is going to raise the interest rates, and yet here you are pushing a market that is just trading for the week around a 225, 223 level for the yield. Nothing in the 2.6 that the market was looking for, which would put futures way down, by the way. The market's poised here. That is the safe haven play of people not sure about Brazil, what's going to happen with the presidential special prosecutor. Lots of things on the table. So the opposite. And this is a bull trend. You got higher lows, you've had higher highs, but the resistance right here, again, one of these channels that the market has, and momentum is still pointing up. In the dollar index, we're falling and falling hard. Now, the November lows were back here in the 96 level on the weekly chart. We're attacking them. You're under the 100-week average. You're under the lower Bollinger Band. This is the first week under it. So there's a 4% chance, got it, because it's weekly chart now, 4% chance that the market will stay under it next week. Gives you the ideas. And momentum still pointing down. I do not look at momentum on weekly charts using slow stochastics in the same manner that I do on daily. I use them more of a guide as to where the momentum is going, and this is still locked in down. I don't get all caught up in embedded or not embedded on the weekly charts. And when we get to the week, if you want to ever write a question, I'll explain the difference. If you look at the euro currency, market broke out to the upside. And it's over the 100-week average for the first time. Momentum is still pointing up. You got higher lows, higher highs. This is the poster child of bullishness. It's running, admittedly, getting over an upper Bollinger Band, a little problematic. But last week, was it over it? No. So this week it is. So first week over. It can go 3-4 more weeks if it wanted to, but there's plenty of momentum to the upside. British pound keeps hitting the upper Bollinger Band, getting over it, hitting it again, momentum staying bullish, no matter what they throw. And there was a mini crash yesterday in this market. I watched it break 100 points in seconds. That's a big break. I still don't know what happened. It held where it had to, and it's still holding together at this point, still staying in a bullish posture. The Canadian dollar is being lifted in large part by higher commodity prices for crude oil. And that plays its impact, and it's carrying this market up. And, you know, it's hard to get short that market in front of the OPEC meeting, but afterwards, if this is all it's doing, you're going to find some willing sellers in the market. In the Japanese yen, there is no trend. The market's got a higher high, a lower low. That is not a trend. Momentum is pretty flat here, pointing one up, one down, nothing going on. We had a bullish crossover where the 18-week average got over the 100, and the market is now closed over that. And if we come back to last week, you had that play. It wasn't at work then, and I want to make this ultra clear. Let's go back to where it comes into play. Here's the 18 over the 100. Now it's about the same, and here is the 100 over the 18. So as the market had this switch over to it, it actually was falling, and it fell down to it, and now it's back in play for the first time since that switch has happened. We'll see if there's any legs to this market because of it. Crude oil, first major resistance point, 51.03, the 18-week average of closes. You have a downtrend on the swing line. The bias is down because prices are under that 18-week average. Momentum is pointing up. You got divergence in the market. Hard to make a call on what to do going into what we, like if a Fed had a major meeting on interest rates, this OPEC meeting's a major meeting. What if they don't extend? What if they only extend to the end of the year? What if they surprise you with a bullish piece of news and instead of 1.8 million barrels a day, they go to 2.5 million barrels a day of cuts? I mean, there's so many unknowns, it's very dangerous. Nat gas, market is trying to act bullish. Higher lows, higher highs, momentum waning a little bit here. If the market gets back and closes under 311.20, could even break this uptrend, but it's trying to pay attention to warmer weather follows cold weather. That's what's going on. As I told you about my research, pretty simple. At 8:30 in the morning, I record and cover 40 charts at a time. And I throw out buy here, sell there, do this, do that, very specific. The idea there is to get you going, not me, for ideas that the pros might be doing in the pits, what I've learned over the years, what I think they're doing. I can't prove it. It's what I think they're doing. I'd like to give you free access to it if you haven't tried it. You can click under us on one of these websites and do that. It'll say click here for Ira's free offers. But for a lot of you, you've had this free trial. Ira 20, write that down. All you got to do is click on this icon right here if you're watching me on YouTube. You can go to our website at www.iraepstein.com, and what you can do is just go to the research area, click down, become a subscriber, sign up, put in Ira 20. If you're a non-client of ours, don't have a trading account, instead of $60 for 30 days access to what I do, it's $40 for the first 30 days. If you're a client, have a trading account, and you want to try it and you're not a subscriber, put in that. Instead of 40, it's going to be 20. I don't do this very often. It's going to end very shortly. So my advice to you, take advantage if you're interested in it. Call us, go to our website, click up here, or under us on numerous ones. You have a great weekend. I talked too long today, but there's so much to cover. You have a great day.